From declining inflation to bullish activities in the secondary market, we bring you the latest economic updates for the month of July 2023. Hi, I'm Zaima Jihan and welcome back to the First Capital Economic Watch. At its meeting on 8th August 2023, the Monetary Board of the Central Bank of Sri Lanka decided to lower the statutory reserve ratio, which applies to all rupee deposit liabilities held by licensed commercial banks, by 200 basis points from 4% to 2%, effective with the reserve maintenance period beginning on 16th August 2023. According to the central bank's current stance on monetary policy, this action aims to permanently reduce the market liquidity deficit and infuse liquidity into the banking system. This decrease in the SRR is anticipated to release about LKR 200 billion in liquidity to the domestic money market, allowing for a further lowering of market lending rates due to the decrease in LCB's cost of funds and supporting an increase in credit flows to the economy. Moving on to the government securities side. The secondary market opened the month on an exceptionally bullish sentiment as the DDO proceedings were clarified during the beginning of the month. Buying interest further intensified following the policy rate cut of 200 basis points. Accordingly, yields dipped substantially across the board during the month, while predominant interest was enticed on mid-tenors, which declined by over 1,000 basis points. During the month, CBSL conducted the first bond auction post-IMF approval and closed at a higher weighted average yield relative to the market rates. However, towards the end of the month, mixed activities were observed in the market amid slight profit booking. In line with this declining trend of interest rates movements, finance sector rates reflected the same, where AWPR decreased below 20% and recorded at 17.18% towards the end of the month, while interest rate spread declined to 2.4%. Moreover, private sector credit increased for the first time in 12 months by LKR 73.8 billion compared to the previous month amidst the dip in rates. Meanwhile, state credit also improved by LKR 164.4 billion relative to the previous month. On a year-on-year basis, private credit recorded a decrease of 8%, and on a month-on-month basis, it is an increase of 1.1%. If we look at the inflation for the month of July, as expected, inflation continued to display a declining trend for the 10th consecutive month to 6.3% year-on-year, while month-on-month inflation declined by 1.1%. Year-on-year inflation of food group has decreased to minus 1.4% in July 2023 from 4.1% in June 2023, while non-food group decreased to 10.5% from 16.2% in June 2023. Analyzing the month-on-month inflation, the CCPI index declined by 1.1% month-on-month, contributed by the decrease in expenditure of non-food items by 1.13% and an increase in expenditure of food items by 0.01%. In food items, green chilies, fresh fruits, potatoes, vegetables and eggs significantly contributed to the increase. Meanwhile, non-food price decrease was mainly aided by housing, water, electricity, gas and other fuels, and health. Looking at the NCPI for June 2023, NCPI further contracted to 10.8% year-on-year compared to 22.1% in May 2023. In the meantime, foreign reserves improved by USD 38 million to USD 3.8 billion in July 2023. Also, market liquidity displayed volatility and remained negative during the month of July 2023. In terms of the government securities, there were LKR 1,433.2 billion worth of maturities during July and new issues through auctions worth of LKR 630.7 billion, creating a deficit of LKR 802.5 billion. Also, CBSL holdings continued to escalate and ended the month of July above LKR 2,600 billion. Moving on to external sector performance. Trade deficit amounted to USD 364 million in June 2023 compared to a surplus of USD 23 million recorded in June 2022. In terms of exports, earnings from exports declined by 19.5% in June 2023 to USD 1,005.3 million, mainly due to the decrease in earnings in industrial exports, including garments, amidst a slowing external demand, while there was a decline in export of petroleum products due to the reduction in average export prices of bunker fuel. In terms of imports, import expenditure increased by 11.6% year-on-year to USD 1,369.1 million in June 2023. The increase in expenditure on consumer goods contributed to the increase in import expenditure, while an expenditure on imports of intermediate and investment goods too increased during the month. Worker remittances too continued to expand to USD 476 million in June 2023, increasing by 73.4% year-on-year. Earnings from tourism for June 2023 increased to USD 123 million from USD 45 million in June 2022. Accordingly, BOP for January to June 2023 was recorded at USD 1,958 million compared to January to May 2023 amount of USD 1,597 million, resulting in a net inflow of USD 361 million for the month of June 2023. In terms of tourist arrivals, the total arrivals for the month was recorded at 143,039, displaying an increase of 202.5% year-on-year compared to July 2022, owing to factors such as improved socio-economic conditions, continuous enhancement of air connectivity followed by China's recent reopening, and the strong pent-up demand. The largest source market for tourist arrivals in July were India, the United Kingdom, China, Germany, and Russian Federation. In terms of the currency movement, although LKR depreciated against USD on a month-on-month basis and stood at LKR 329.4 towards the month end, while on a year-to-date basis, LKR strengthened against most of the major currencies including USD, UK pound, and Euro. Finally, moving on to the global market, a positive sentiment persisted as most major indices were seen recovering during the month. So with that, we conclude the monthly recap for July 2023 and stay tuned for more updates in the future. Thank you.